I want to start off with a quote from your note today, and I think we can bring it up. We have it on full screen. A $1.4 trillion tax cut deal that drops the corporate tax rate to about 20% is financed by $1 trillion in additional borrowing from the Treasury Department and has a mixed impact on individual taxpayers. You're not exactly selling this tax deal.
Well, I think it has a lot of potential issues as it relates to the real economy. Obviously, the state and local tax issue has been talked about, particularly in the Northeast corridor. But there's also this idea that there's going to be a timing mismatch between what immediately hits the consumer and how long it takes the corporate side to really pick up the slack. It is a version of trickle-down economics, and the question is, how long will it take that to actually hit the real economy?
When you talk about the budget deficit that this tax increase will add to, how much does that matter for bond investors when Treasury yields have been low since the financial crisis?
I think that the Treasury Department has already come out and they have told us essentially the go-to financing mechanisms are going to be in the very front end of the curve. So that's bills, twos, threes, maybe fives, at a point when the market is already expecting the Fed to push forward through or with normalization, so rates are going to be higher there anyway. So I don't think that it has a net impact for 10 and 30-year yields, but it does push further with the flattening of the curve that's been in place for a while.
How will companies react? Will they hire more? Will they spend pretty soon on plant and equipment?
U.S. companies have a very strong track record of taking tax breaks, corporate tax holidays, and bringing profits home and then distributing them to the shareholders either through a one-time dividend or share buybacks. So I think that the challenge in this particular episode will be whether or not the companies are really willing to invest in productivity-enhancing payouts, and I don't think that that's going to happen right now.
Will this time be different just because of the size of the tax reform that's happening right now?
I wouldn't think so, because it's $140 billion a year over 10 years, and the U.S. economy is $19 trillion in nominal terms. And to say that it's going to move the needle, sure, it will be worth a quarter point in real GDP for 2018 and 19. Those are the mean estimate there. But it's not going to really drive the economy in the out years unless we see a material retooling of U.S. industry.